In the world of investing, there's this incredibly powerful force that can make or break fortunes, and it has nothing to do with charts or spreadsheets. It's the emotional cycle of fear and greed. Today, we're going to dive deep into that cycle, and more importantly, figure out how you can master the psychological game of investing. So let me ask you a question right off the bat. What do you think is the single biggest risk to your portfolio? I mean, is it a huge market crash, a bad company, maybe a global recession? Well, the real answer, it might actually surprise you. Yep, the biggest threat to your long-term wealth isn't the market, it's you, or me. It's us. More specifically, it's our own hardwired emotional responses that trick us into buying high and selling low, completely torpedoing even the most rational plans. To really get why this happens, we have to look at the psychological engine that's really driving the market. And a great way to picture this is as a giant emotional pendulum. So just imagine the entire market is constantly swinging between two massive extremes. Over on one side, you've got pure greed. Everybody's euphoric, prices are going ballistic, pushed to absolutely insane levels. Then it swings all the way to the other side, fear. Panic takes over, and people are just dumping everything, no matter the price. Your success, really, it all comes down to knowing where we are in that swing. And this emotional journey tends to follow a really predictable path. It often starts with complacency, when things are just kind of quiet. Then, a little optimism starts to build, and prices start taking up. This thing then just snowballs into full-blown euphoria. That's when FOMO, the fear of missing out, is just off the charts. But then, the first whispers of trouble bring on anxiety. That anxiety quickly morphs into real fear as losses start to pile up. And finally, it ends in absolute panic, desperate selling right at the bottom. Just recognizing these stages is the first huge step to mastering them. Let's start with the fun emotion, the one that feels so good while it's happening, but it's the one that sets the trap: greed. Remember the dot-com bubble? Greed was at a fever pitch. It was a party. But when that party finally ended, the tech-heavy NASDAQ index crashed, a staggering 78%. Fortunes just gone. Overnight. That's the real price of peak euphoria. And the psychology here is just fascinating. During that bubble, you heard this phrase everywhere: "This time is different." Investors totally convinced themselves that the old rules of, a company actually having to make money just didn't apply anymore. And why? Because when you're making easy money, your brain is flooded with dopamine. It literally creates a feedback loop that feels a lot like a gambling addiction. You start to feel invincible. So how do you know if you're getting a little too greedy? Well, here are some of the classic warning signs. Are you checking your stocks constantly, like multiple times a day? Do you suddenly feel like you're an investing genius? Are you maybe even thinking about borrowing money to get even bigger returns? If you're nodding your head to any of these, you might be in the danger zone. Okay, so now let's let that pendulum swing all the way to the other side. Because while greed sets the trap, it's actually fear that often does the most lasting damage. It feels like you're protecting yourself, but really it's wealth destruction in disguise. Think back to the COVID-19 crash in March of 2020. Panic was absolutely everywhere. And yet, in the 6 months that followed, the market just came roaring back. India's Nifty index, for example, rallied over 50%. If you sold at the bottom in a panic, you missed one of the fastest recoveries in history. And this is the logic of fear. It sounds so responsible, doesn't it? Oh, I'm just protecting my capital. But here's what's really happening. Your ancient caveman brain's survival mode just kicks into high gear. Logic goes right out the window, and you sell at the point of maximum pessimism, usually with no plan at all for when to get back in. And here are the signals that fear is starting to take the wheel. Are you afraid to even open your investment app? Do you find yourself just doom scrolling through financial news, looking for some kind of reassurance? Does the very thought of your portfolio make you feel physically sick? These are huge signs that your emotions are in the driver's seat, not you. Okay, so we've identified the villains of our story: fear and greed. Now for the good part. How do we fight back? It's not about becoming a robot. It's about having a toolkit to manage these very, very human emotions. So let's look at the first tool you can build. This is basically your emergency brake. The second you feel that extreme fear or that crazy euphoria, you pull the lever on this protocol. First, just acknowledge it. Say, okay, I'm feeling euphoric. Step 2, and this is absolutely crucial, pause everything. No trading for at least 48 hours. Use that time to calm your nervous system, go for a walk, do some breathing exercises, whatever works. Then, talk to someone rational, look at historical charts to get some perspective, and finally, and this is the most important part, you execute the plan that you already made when you were calm and logical. Now, having a protocol is great for emergencies, but the ultimate goal here is to go beyond just surviving volatility. It's about building a system where you actually get stronger from it. There's a word for this: anti-fragility. So, what does this look like in the real world? Okay, imagine the market crashes, down 20% plus. Our natural impulse, our gut reaction, is to panic and sell. But the anti-fragile response is the complete opposite. You see it as a sale. It's your chance to buy the amazing companies you've always wanted, but at a huge discount. Honestly, this one little shift in perspective is the foundation of creating long-term wealth. Okay, so how do you make this happen automatically so you don't have to rely on willpower? Simple. You build a system. Rebalance your portfolio on a fixed schedule, not based on how you feel. Set clear rules, like always keeping a crash fund of cash ready to go, and set limits on how much you can have in any single hot stock. These rules literally forced you to be greedy when others are fearful, and fearful when others are greedy. And that really brings us to the core lesson of this entire explainer. Look, you can't eliminate your emotions. You shouldn't even try. They're actually powerful signals. The real goal is to build a system that channels the energy of fear into buying opportunities and channels the energy of greed into taking smart, prudent profits. So I'll leave you with this. The next time the market is in a total panic and you feel that pit in your stomach, remember this quote: that fear you're feeling, it might just be pointing you directly toward your single greatest opportunity. The only question is, will you have a system in place to actually act on it?